Okay, so everyone wants to know what Warren Buffett's doing, right? Especially when the market's, well, being the market. Up, down, who knows?
Exactly.
And we've got this Motley Fool article all about some of his recent moves, and they're kind of head-scratchers.
A little bit, yeah.
So we're going to do a deep dive, see if we can figure out what the Oracle of Omaha might be thinking.
Sounds good. Let's dive in.
So first off, can we just acknowledge, like, the market right now is, like, everyone's predicting huge gains.
Yeah, you've got, like, the S&P 500, they're saying 25% gain.
Yeah.
NASDAQ, 26%. Even the Dow, 18%. I mean, those are big numbers.
Yeah, it's like AI, low interest rates. Everyone's just like, woo!
Throwing money at it.
Yeah, it's tempting to just jump in and buy everything.
Right. And that's what makes what Buffett's doing so interesting.
Okay, yeah, because he's not
buying.
No, he's selling.
He's selling.
Which is like what?
Right.
The article mentions Apple and Bank of America. I mean, those are like his babies, right?
He's held them for a long time, yeah.
So is he saying Apple is a bad company now?
No, it's not that he's saying they're bad companies.
Yeah.
It's more like he's looking at the bigger picture.
Okay.
You know, like, how's the overall market doing?
Right.
Is it maybe, I don't know, a little too hot right now?
Like, everyone's getting a little too excited.
Yeah.
I feel like he said something about that.
He did.
I think it was in his last shareholder letter.
Yeah, he talked about, like, casino-like behavior.
Oh, right, yeah.
In the market.
And this isn't the first time he's seen this.
No, not at all.
Didn't he say something similar back in 2000?
Exactly, during the dot-com bubble.
Oh, yeah, when everyone was going crazy for anything with .com at the end. Right, and a lot of people lost a lot of money.
They did, yeah.
So is he saying it's like that now?
Well, it does feel like AI is the new .com.
Yeah, okay.
All this potential.
Everyone's so focused on the potential.
But maybe not looking at the risks.
Okay, so he's not saying, like, sell everything.
No, not necessarily.
More like, hey, maybe chill out a bit.
Yeah, like take a step back, look at the big picture.
Don't get caught up in the hype.
Right, think long term.
Which brings us to, I guess, value investing.
Right, that's his whole thing.
Yeah, but like, how do I do that?
What?
Like, I'm not Warren Buffett. I don't have billions of dollars.
Of course, yeah.
How do I even know what a stock is really worth?
There are tools and strategies.
Okay.
For example, have you heard of the Shiller-Cape-E ratio?
The what?
The Shiller-Cape-E ratio.
No, not really. Break that down for me.
So some people just look at a company's earnings, you know, for like this year.
Right.
This is like looking back over the past 10 years of a company's earnings, and it adjusts for inflation.
Oh, that makes sense.
Gives you a much better picture of whether a stock is actually a bargain.
Okay, that's interesting.
Yeah, it helps you see if the current price is justified.
Right, based on the company's actual track record. So what's this Shiller thing say about the market right now?
Well, that's where it gets a little...
A little what?
Concerning, maybe.
Oh.
It's over 35 right now.
And that's bad because...
That's a level we've only seen twice before in the entire history of the S&P 500.
So basically what you're saying is...
Historically speaking.
Yeah.
The market is very expensive.
Oh. So even if it seems like everything's going up, it might not actually be worth what people are paying.
That's a possibility.
Okay, so we've got a market that seems to be booming, but maybe it's all hype. And we've got Buffett, the Oracle himself, selling off some of his biggest winners.
Right.
So, like, what do I do with my own investment?
That's the million-dollar question.
Right.
That's what we'll talk about next.
Okay, I'm ready for part 2. Okay, so, like, after all that, should I be freaking out? Should I be selling all my stocks?
Well, no, not necessarily.
Okay.
I think the main takeaway here from Buffett is don't panic.
Okay.
You know, market downturns happen.
It's a normal
right.
part of the cycle.
So it's not about trying to avoid them altogether.
Right. It's more about how you handle them.
Okay, but that's the hard part, right? Like knowing when to buy, when to sell.
There's no like magic formula or anything. But I think what Buffett shows us is like discipline, you know, playing the long game.
Right. All right. Remember that phrase from the article, quality stocks at reasonable prices.
Exactly.
Yeah. It sounds so simple.
It does.
But how do you actually do that?
Well, first you got to like define what quality means to you.
Okay, so like what am I looking for in a company?
Yeah, exactly. Like, are they making money? Consistently?
Consistent earning.
Are they innovating? Keeping up with the times?
Right, adapting. Okay, what about their management team?
So I'm looking for companies that I actually, believe in.
Yeah.
The ones that seem like they have a shot at long-term success.
That's the idea.
Not just riding some hype wave.
Exactly. And that's where the reasonable price part comes in.
Right, because even a great company can be a bad investment if you pay too much.
Exactly. You don't want to overpay.
Okay, so no jumping on the bandwagon just because everyone else is.
Right. Do your own research.
But see, this is where I get stuck.
Yeah.
Even I get caught up in the hype sometimes.
Easy to do.
Like AI, for example.
Oh, yeah.
Everyone's talking about it.
It's exciting.
It is exciting. It feels like this is the future. I got to be a part of it.
I get it.
But how do I know which AI companies are actually worth investing in?
That's the tricky part, right? It's not just about, the headlines.
Okay.
It's about digging deeper. What's their business model?
Yeah.
What makes them stand out from the competition?
Okay.
And really importantly, do they have a path to actually making money?
Like real profits.
Yeah, because not every AI company is going to be a winner.
Right. Some are going to flop.
For sure.
So it's kind of like being a detective.
A little bit, yeah.
Trying to figure out, is this the real deal or just a bunch of smoke and mirrors?
And this goes back to one of Buffett's big things.
Okay.
Don't invest in something you don't understand.
Yeah, that makes sense.
If you can't explain it simply,
Yeah.
probably shouldn't be putting your money there.
Okay, so it's not about avoiding the next big thing altogether.
No, not at all.
It's about being smart about it.
Exactly.
Do your homework. Make sure there's some substance behind all the hype.
That's it.
But even if I do all that,
Yeah.
I'm probably still going to make some mistakes.
Rightly. Yeah.
Even Buffett makes mistakes.
He does, even the Oracle.
Really?
It happens.
But that's what makes him so good, right? He learns from them.
Exactly. He adapts. He keeps evolving.
So it's a process.
It is.
It's not about being perfect. It's about learning as you go.
And being willing to adjust.
Okay, that makes me feel a little better.
Good.
Because I'm definitely still learning.
We all are.
And it's not just about, the numbers and the data.
No.
It's also about, psychology.
Oh, absolutely.
Managing your emotions.
Huge part of it.
It's so easy to get caught up in, the fear and the greed.
It really is.
Yeah.
That's why having a solid plan is so important.
Okay.
Helps you stay grounded when things get crazy.
Don't let the market's mood swings dictate your decisions.
Exactly.
Okay, but all of this still feels a bit, theoretical.
Yeah.
How do I actually apply this to my own portfolio?
That's a great question.
Real practical steps.
Let's get into that.
All right, let's get down to brass tacks.
Okay.
We've talked about Buffett, the market, long-term thinking, but, what do I actually do?
Right. How do we take all this and make it work for you?
Yeah, for me, my portfolio, my goals.
Well, it all starts with, understanding your own situation.
Okay, so, what are my goals?
Exactly.
Am I saving for retirement, a house, just general wealth building?
Those are very different goals, yeah.
Right, and those different goals.
Are going to need different strategies.
Okay, that makes sense.
If you're saving for a down payment in a couple years,
Yeah.
probably not a good idea to be taking big risks in the stock market.
Okay, but if it's retirement, way down the line.
Then you've got more time to ride out the ups and downs.
Right, more time to recover if things go south.
Exactly.
Okay, so once I know my goals, my risk tolerance, where do I even begin?
And it's about building a diversified portfolio.
Okay, so not putting all my eggs in one basket.
Right, and this is where those Buffett principles come in.
Quality stocks at reasonable prices.
Exactly.
But how do I know if it's a quality company?
Well, you got to do your research.
Okay.
Look at their financials. Read analyst reports.
Yeah.
Follow industry news.
But that's a lot.
It is.
It can be overwhelming.
It definitely can be.
Especially when you're first starting out.
You don't have to become an expert overnight, though.
Okay, that's good.
It's a learning process. Take it step by step.
Yeah, like anything else.
Right. The more you do it, the more comfortable you'll get.
Okay, but then there's this other pressure,
Well, yeah.
the next big thing.
I know what you mean.
What if I miss the next Apple or Tesla?
That FOMO, right?
Yeah. The fear of missing out.
It's real.
And it makes me want to chase every hot new stock.
But remember, Buffett didn't get where he is by chasing fads.
Right.
He focused on solid companies.
Yeah.
The ones that are quietly making money year after year.
So, the steady performers.
Exactly.
Not always the most exciting, but reliable.
And they can form a really strong foundation for your portfolio.
Okay, so let's say I've done my research.
Yeah.
I've built my portfolio. I'm feeling good.
Awesome.
What's next? Just sit back and watch it grow.
Well, not quite.
Oh, no.
It's about staying the course.
Even when things get rough.
Even then, remember, investing is a marathon.
Right, not a sprint.
There will be ups and downs, but if you've chosen well
Yeah.
and you're focused on the long term,
Yeah.
you'll be able to ride out those storms.
Okay, that makes sense, but it's still hard not to get emotional, right?
It is. Emotions can really mess with your decisions.
Exactly, like when you see your portfolio dropping.
That's why that plan is so important.
Okay.
It's like having a roadmap.
You know where you're going.
And how to get there.
Even if there are some detours along the way.
Exactly.
And it's okay to ask for help, right?
Of course.
Like if I need a financial advisor or something.
There are tons of resources out there.
Books, websites, podcasts.
You don't have to do it all alone.
That's good to hear, because it can feel pretty lonely sometimes.
It can.
Just trying to make sense of it all.
That's why we do these deep dives.
Yeah.
To help break it all down, give you the tools you need.
And sometimes it's just good to remember.
Yep.
Even Warren Buffett doesn't have all the answers.
No, he doesn't.
He's still learning, still adapting.
And so are we.
Exactly. That's the journey.
It is.
So as we wrap up this deep dive, thinking about Buffett, his moves.
Yeah.
The biggest takeaway for me, it's not about trying to predict the market, be smarter than everyone else.
Right.
It's about knowing yourself, your goals, doing your research, investing in what you believe in.
Long term.
Exactly.
And remember, even though Buffett's selling some of his holdings,
Yeah.
he's not giving up on the market.
Right. He's just adjusting.
Based on his own assessment.
And that's something we can all learn from. So, to our listener, thanks for joining us on this deep dive.
Yeah, thanks for listening.
Remember, don't let the headlines and the hype get to you.
Stay focused.
Focus on building that solid portfolio. Stay disciplined.
Time is on your side.
And happy investing.